Hi everyone, Phil Rogers and Lauren Hall here from Low Market Edge. It's that time of year again, tax time. Time to pull out all of your receipts and make the frantic calls to your accountant and ponder over ways to claim the new jet ski or
your new handbag.
Tax can feel like a lot if you're not in the know. And the last thing we need, or you need, is negative financial surprises at that time of year. We've learnt through the years that preparation is everything. Grab the bull by the horns and get organised and know what your liabilities are and prepare well. Here are our top tax tips for 2022 leading into the financial year.
The first one is to do your research. Tax and your business is your responsibility. So when doing your research, meet with your accountant early and know what's required. Jump on the internet, contact the Australian Tax Office, your accountant, or an experienced tax-paying business mentor and become comfortable with tax and tax terms. Our mantra is to find reputable people who've done it before and learn the quickest and best way from them.
Speak regularly to your accountant and during the year as well. Keep them up to date with your business and ask lots of questions about record keeping and tax planning in advance. Find an accountant who is willing to support you all year round, not just in June.
Like most things in life, if you know what you're up against, it's much easier to deal with.
Second top tip is to be organised. Efficient filing is important. Being able to find a document possibly 1 or 2 years later can be a real nightmare without an effective filing system. Remember, time is money.
So here are some key questions you should be asking your accountant to prepare yourself for tax time. What taxes are applicable to you and your business? When are they due to be paid? What is a tax deduction and when and how can they be used? What should you be recording? And how does the paperwork need to be recorded and filed?
Putting off tax planning until the last minute or not having tax as a priority can lead to oversights, money shortages and unnecessary panic. Don't let taxes become a traumatic experience this year. If you need help, just ask.
The third one is to claim what you can. Working from home is more popular than ever. If you haven't been keeping a record of your utility costs, you can contact your provider for the year's statements. You can then work out the percentage of time used in your home office and claim a portion of these bills.
There are many items which are claimable, but many people are unaware of just what they are. Have you recently maybe purchased a computer, an iPhone, not a Samsung, or some home office furniture? Subscriptions to publications, course costs. You may even be able to claim those new pair of sunnies you bought if your job involves being outside. So you can consult an accountant early to find out exactly what you're able to claim.
If you haven't been keeping physical receipts throughout the year, you can search through your email inbox to find electronic receipts of purchases that have been sent to you. It's also a good idea to keep a spreadsheet of your expenses rather than just the receipts, as it will save you time at the end of the financial year so your accountant doesn't have to wade through boxes of paper to do their job. There are even apps for phones, iPhone and Samsung, that capture information as purchases are made, so there's no excuse for you not to be organised.
And of course, one of our biggest top tips at this time of year is to review your home loan. While you have your documents together, it's a great idea to review your home loan and your position overall. The end of financial year is a great time to review your circumstances. We can give you a home loan and health check to make sure and help assess what does that loan look like, how does it compare to others, over 60 lenders, and what's on offer across the board. We regularly save our clients thousands of dollars a year on interest on their loans. So imagine how many investors and homeowners are out there paying considerably more in interest to their bank than they need to, but they just don't know it.
This could be your opportunity to maximise your bottom line on your investment, or potentially pay off your home loan sooner by paying less in interest and more in principal. You simply need to provide us with 4 basic pieces of information so we can tell you of any potential savings. Those are your current loan amount, your current lender, current property value, and current interest rate.
So As simple as that sounds, there's lots to go through, so get in touch. We're always happy to help and would love to chat. Bye for now.